Let's delve into this PPI number. I mean, coming in at 7.4% year-on-year in June from 6.9% in May. And we thought that the number wouldn't really deviate from that 6.9% level or 7% level. If you look deeper into the numbers, it's those imported commodities which are really starting to have a big impact. In fact, coming in at double digits at above 10% month on month.
Absolutely. I think if you really look at the impact coming through, a lot of that coming through from a really rising commodity basket from offshore, that number at least 0.5% higher than consensus expectation. And that post that announcement coming out about half an hour ago, we did see the rand start to weaken from stronger levels that it had traded at earlier in the day, and similar weakness coming through in terms of some of your bond markets as well. But both those markets really on the back of a few days where they've traded significantly stronger in any event.
Well, what would you say the next step is, though, for foreigners and for local investors, given the fact that we're starting to see PPI creeping up significantly? We haven't seen retailers passing these kind of increases on to the consumer as yet. And we're also talking about an interest rate hike possibly only happening in early next year. So what do you think? Are we going to start seeing a re-rating with regards to what's being priced in?
I think if you really look at this point in time, the market, the general market consensus and expectation are for rate hikes next year. I think that base case still stays intact, and really market participants would be looking at changing their expectations in terms of how early those rate hikes do materialize during the course of next year. So I think that still very much is firmly the base case, and certainly is our view that we'll really only start seeing rate hikes coming through early next year. That being said, a lot of market participants in this space are forecasting rate hikes as early as the later end of this particular year.
Well, Mohammed, as I mentioned, we're starting to see retailers perhaps being very cognizant of the fact that they're going to have to start passing on the inflation that they're experiencing, even though we're not really seeing the demand coming through. And of course, this has been coming through from a lot of the retailers. In the meantime, we've got South African government talking about wanting Walmart to boost the fund for local suppliers to around 500 million rand. Give us your view on what is happening within the investment space in the country, because it seems that there's a lot of disconnect from what we're seeing on the ground and what we're hearing from the corporates.
Yes, Eleni, I think if you break that into two parts, the first part is that absolutely your retailers are going to have to push these price increases through to the end consumer. They're not going to be able to absorb that into their margins for much longer. That being said as well, a lot of talk around unions really putting a lot of pressure on Massmart to increase that fund for local suppliers from 100 million rands to 500 million rands. And this as well, coupled with a report I saw earlier this morning out from the United Nations in terms of their Trade and Development Investment Report, really citing that South Africa really on the back foot when it comes to foreign investment. I mean, historically, since 2009 until now, we have seen a decrease in foreign direct investment of around 70%, with South Africa now really the 10th destination in terms of priority for foreign investors in Africa and around 69th in the world. So that doesn't necessarily bode very well for South Africa as a destination for foreign investment. And the fact that arguably there are these hurdles to foreign direct investments in South Africa leaves a bit of a sour taste in many investors' mouths.
Mohammed, when you look at what Massmart's been doing from a share price perspective, it hasn't really been affected by the negativity, the fact that government has started to perhaps be very vocal about new rules and tougher conditions for the likes of Walmart. Why do you think that is? Even though the trading update disappointed some investors, it seems that the market is not really ensuring a re-rating to come through.
Yeah, I think if you really look at it, there's always a bit of give and take in this particular space. There was a report earlier out yesterday that Massmart would, Walmart rather, would be sourcing fish supplies from South Africa for distribution across their global network. So a bit of a give and take in that particular front. And I think market participants are saying this is not a done deal. It's not a fact that they would need to increase that fund for local suppliers. So it's not necessarily a deal stopper. I think the fundamentals of the deal still make sense. That being said, Massmart really trading quite flat on the day at around 144 rands, and we don't anticipate to see any huge moves until there is any clarity in terms of any of this news that is coming out.
Yeah. Mohammed, let's touch on Investec. Investec is down around 3%. First quarter profits slightly higher, but keeps talking about a very tough condition and environment on the ground.
Absolutely. I think, Eleni, if you look at Investec, a fairly poor set or fairly poor update that they did put out today, citing tougher conditions. The saving grace of that business at this point in time has certainly been that asset management and wealth business, but they did also cite that their principal activities, they saw a large decline in that. Now, principal activities are where Investec effectively participate in a bit of an equity stake in some of the deals that they do put together. That was particularly poor. And what was disappointing for us in those Investec numbers that came out today was that if you look at your credit loss ratio, that has decreased quite substantially, and one would expect that financial leverage effect to really come through in terms of the results. That being said, really only up marginally year on year. So quite a poor update coming out from Investec today, and investors are really asking, where will we really see that value unlock coming through from Investec?
Well, what would you be doing with your Investec shares right now? If you held any, Mohammed, would you be selling? Would you be waiting?
I think our view on this at this point in time has been a hold for quite some time. We like the stock. There is value to be unlocked within the group. It's just a question of when that value gets unlocked and how that value gets unlocked. So fundamentally, we do like the business. We are cognizant of tougher market conditions out there. In particular, Investec, when looking at their private banking business, hasn't had a very good time in that particular space. We would really be looking at the stock as a hold at this point in time.
Let's touch on Mondi. We saw the company coming out with an interim dividend of 8.25 euro cents per share. We saw the company talking about tough conditions coming through in Europe, but it seems that they're starting to find their feet, and we know that they've of course unbundled the likes of Impact, which is also proving to look quite good, at least for now.
Yes, I think Mondi, a good set of results coming out of Mondi today. We did see that stock really having underlying profit up by around 74%. That's translated into an earnings per share increase of around 59% for the 6 months update. A lot of that growth coming out of Europe and the international operations, but also not a very bad outlook for their local South African operations. They had South African output increasing. They've had an increase in terms of the selling prices for their product. So quite a good update there. Looking forward, however, they have cited an order book that is looking particularly softer. And then there's also the issue of planned maintenance coming through from a lot of their European activities. That likely to put a bit of a damper on the next half or next quarter's set of results. That stock trading down marginally the last time I looked at it today. But all in all, a fairly good performance from Mondi, with a stellar performance over the last 12 months, with the stock being up close on 42% odd.
So would you be buying Mondi at this level, or would you say 42% increase over the past few months is too much?
I think 42% is quite substantial. I wouldn't be surprised to be seeing investors taking a little bit of profit off the table on that particular counter. Also on the back of a softer or potentially softer order book coming through, and the outlook looking a little bit tougher for Mondi over the next 6 months. I'd be looking at taking some of that profit off the table.
Okay, so ArcelorMittal is down 1%. It was down 6% yesterday. Dismal numbers. What would you be doing with ArcelorMittal?
ArcelorMittal has been a stock that I haven't liked for quite some time. I mean, we've seen that stock now trading down after yesterday and the 1% today, trading down to levels we haven't seen in the last 2 years, close on around 69 rands a share. So I think the outlook there for ArcelorMittal, even for the next quarter, has been priced in at this point in time and doesn't look particularly rosy. I mean, the impending strike will impact their Q3 earnings, and they're also citing weak demand both locally and globally. They've also seen fairly weak demand for their product, lower production numbers locally. So I think the outlook domestically for ArcelorMittal not fantastic, globally also not fantastic, and in particular they are facing significant cost pressures, which I think did surprise the market yesterday. All of that really coming into play, seeing that stock as the biggest loser yesterday, and still seeing that stock trending down in line with the rest of the market today. Wouldn't be looking to acquire or hold ArcelorMittal at this point in time.